Today, I want to talk about how short sellers have lost $120 billion so far this year across the wider market. I want to briefly explain why this is important for the AMC squeeze, but also talk about the BlackRock exposure in a little more detail. So stay tuned and let's make some money. And now to dive straight in with the key information. So, Genevieve has tweeted saying short sellers have lost $120 billion so far in 2023. Most of the short selling positions are held by hedge funds and institutional investors. That means the very same hedge funds shorting AMC that are also shorting larger stocks like Tesla, Nvidia, Microsoft, and many others are currently down $120 billion so far this year. Now, when you think about Citadel having only $240 billion in assets, that's a massive loss. Obviously, this loss isn't entirely borne by Citadel, it's across all hedge funds. But surely that means Citadel has lost at least 10, if not 20, if not 30 or $50 billion already this year. And as these hedge funds like Citadel continue to lose more and more money shorting the wider market, they get closer and closer to bankruptcy. Now, obviously, it's important to remember these losses aren't reported on the financial statements as they are currently unrecognised losses. Obviously, if Citadel did recognise these losses, that would be a massive expenditure in their profit and loss. But because they're unrealised losses, they can currently go undiscovered until Citadel realises these losses or somehow turns them into a profit, or they end up being liquidated. Now, StockSense Frank has also tweeted this really interesting article about UBS facing tons and tons of fines as a result of Credit Suisse's Archegos. Now, Frank tweeted saying Archegos, does that ring a bell? UBS inherited Credit Suisse's brutal hangover and the mountain of toxic financial assets that still grows. He said, I wonder if there will be another bigger fish that eats the toxic bait even after UBS. But for the moment, it's very convenient that UBS is being paid from the Swiss government to hold this toxic time bomb that nobody knows exactly when it will detonate. UBS has partially agreed to have these fines covered by the Swiss government, and all that's left is the risk to die if it detonates and if these swaps all go wrong. But he thinks an interesting question is why is UBS refusing to close these toxic Archegos short positions? He said is protecting Ken Griffin really more important than the livelihoods of Swiss taxpayers? Because obviously if these toxic short positions are closed, it will likely end with Citadel paying out more than their total assets under management are actually worth. Now, the actual article says UBS faces a hit of hundreds of millions of dollars over Credit Suisse's Archegos failings. It says the Fed's fine could be as much as $300 million, while the UK's PRA, which is the Prudential Regulatory Authority, could impose a penalty on top of up to £100 million. UBS has up to $4 billion of provisions to cover regulatory and litigation costs from its takeover, which was orchestrated by Swiss authorities back in March. And it even says the Archegos affair is one of several unresolved legal and regulatory matters that UBS has taken on in buying Credit Suisse. So it's likely the Archegos positions are still unresolved and still exist to this very day. So far UBS has just taken over those toxic short positions and has not yet begun to close them out. It also says under fund manager Bill Huang, Archegos made tens of billions of dollars on bets on US and Chinese stocks by borrowing heavily from banks' prime brokerage divisions, which had to be rapidly unwound when the value of the company slumped and the firm could not meet margin requirements. And this is exactly what will happen to Citadel as well when these losses get too great. We know that Citadel has been borrowing heavily from banks' prime brokerage divisions because that's how they have a 7-to-1 leverage ratio, because they're borrowing 6 times their total assets in cash from other banks. And that will have to be rapidly unwound for Citadel as well when they fail to meet margin calls. Also guys, with MooMoo you can currently get a guaranteed free share of Tesla or of Google and a $100 cash reward. All you have to do is sign up to MooMoo using the link in the description below. You could always use these free shares and these guaranteed shares to buy more AMC or GameStop shares if you so chose to, depending if you just want 5 free stocks and a $100 cash reward, or to increase that to 15 free stocks, or to get a guaranteed free share of Tesla or of Google on top of that. You just have to make the required qualifying deposit. And when these hedge funds do end up being liquidated or forced to recognize those losses, this is what the AMC chart is going to look like. This here will be the January 2021 run to around $20. Obviously, AMC then traded sideways for a while before running to $70 and above. Ever since, AMC has traded downwards significantly, but when these hedge funds end up being liquidated, the AMC chart and its price will explode. This will be AMC running to many multiples of $70 per share, past $300, past $500, maybe even past $1,000 per share and above. And that's why the AMC cheerleader has said this is the meme stock squeeze to come. And as Howard said, the price action over the last 2 years, the constant up and down, the constant rug pulls and fake outs has been training you for the volatility to come. But let's also talk about that BlackRock exposure video from James O'Keefe in a little more detail. This is Sergey Vale, the subject of James's video. Now, what's really interesting about Sergey is that obviously he currently works for BlackRock as a technology recruiter. But what's even more interesting is the fact that he currently works as a technology recruiter for BlackRock is who he used to work for. You guessed it, Sergey used to work for Citadel Securities as a technology recruiter as well, just before moving to BlackRock around a year ago. Previously, before then, he worked for Morgan Stanley, Deutsche Bank, and a number of other large financial institutions, obviously gaining tons and tons of experience in the industry. That's obviously why he's so senior and knows so much about how BlackRock operates, and it's likely BlackRock learned tons of exactly how they operate from Citadel. Again, this really just seems to link the Citadel and BlackRock manipulation more and more. Now, something I also found very interesting is that Elon Musk himself liked the BlackRock investigation. We know Elon Musk is against market manipulation and will likely be supporting James O'Keefe in his efforts to uncover BlackRock in more detail. James has also said there is a part 2 video coming to this BlackRock expose and potentially even a part 3 after that. Now, something I also thought was really good from James is the fact that he retweeted this tweet from Wall Street Apes. Now, Wall Street Apes I have spoken about in the past and is against the AMC reverse split, but I do think that any publicity is good publicity. James O'Keefe has 1.7 million followers and is obviously retweeting tweets from apes and obviously even investigating BlackRock and other financial crimes. Hopefully more apes can praise the work that James O'Keefe has done and even suggest or request him to look further in detail into the MMTLP fiasco and obviously the AMC and GameStop fiascos as well. Because obviously the more eyes and the more exposure that this gains, especially from James O'Keefe, is just brilliant for the AMC movement. It will bring more external people that support James O'Keefe into this movement and will likely result in more retail investors buying up shares in AMC and GameStop. Now, I also wanted to quickly touch on the AMC lawsuit and give a bit of an update on how the AMC lawsuit could soon be thrown out with prejudice. America tweeted saying Affolter is alleging that the lead plaintiff, Allegheny, does not own any AMC shares and only owns ape shares and wants them removed as lead plaintiffs or as plaintiffs entirely immediately. It says, Your Honour, I'm writing to give this court notice that the Allegheny ownership screenshot appears to show ape ownership and not AMC ownership. The screenshot calls into question whether Allegheny actually owns any AMC common stock. And they've said if Allegheny does not own AMC common stock shares and they lied to both the court and their class members, then Allegheny and their counsel should be removed as plaintiffs immediately. And that's why Dave Murphy added saying, obviously I'm not a fan of Affolter and the crew, but it does make a good point in his recent letter. If Allegheny did indeed lie, the judge should dismiss the case with prejudice. Obviously, if the plaintiffs have been lying about their allegiance or their side this entire time and have actually been working for the shorts since day one, then the case should be dismissed with prejudice. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell because that way you'll be alerted when I upload a new video. Cheers.